Today we have some deliveries going on and I wanted to make sure I recorded this uninterrupted. So thank you for being here. This is your daily financial news for August 15th. We need to talk about Michael Burry's gigantic short bet. We should talk about Warren Buffett buying the housing market. And I want to share a very interesting story from BlackRock. Yes, BlackRock is talking about the employee getting theirs while the company and stockholders don't, which is something we have talked about quite a bit on this channel. I think that is going to be the case for the next 3 or 4 years, but let's get into it. Let's talk about Michael Burry first. Michael Burry has a huge bet against the stock market. What has Michael done? He has went out and bought, people are reporting a $1.6 billion short. It has some intricacies about why how the calculation is done. He's buying put options. We don't know how much or what the strike price was, but based on some casual research of the SPY and Qs, which are the vehicles he has chosen, he's bought 890 million shares of SPY and 740 million of the Qs. My suspicion is he has wagered about $400,000 to $500,000 buying puts, basically thinking the market is going down. So a couple of things to talk about this. Michael Burry obviously gets a lot of credit for his deep research in calling the housing crash, the mortgage-backed securities, all of that, right? The big short. He has been negative and wrong before. I don't know if you know this, but he was pretty negative. He had a tweet says, "You have no idea how short I was or am," and it did not work out well. But yes, Michael Burry believes the stock market is in for some pain. And yeah, I like Michael because he puts up the money, puts it on the board, and then we all get to see what happens. Let's talk about BlackRock real quick. BlackRock now expects the economy to essentially flatline, meaning below trend growth, something we have talked about on this channel, for the next 2 to 2.5 years. They do believe that inflation will return in 2024, but the reason, something we have talked about. Essentially what BlackRock is highlighting now, while we may not ever go negative in GDP growth, we'll go sideways, given that the labor pool is shrinking as more and more folks retire. The labor force appears to be about 4 million bodies short. Inflation is going to grow because of labor shortages. Essentially, what BlackRock is saying is something that I've talked about for a while now, which is just like the 70s, where the employee got theirs and the company and stockholders didn't. In the next 40 years, starting in the 80s, the CEOs and stockholders got there. So again, what we are talking about is, the shift is going to be for income generated for the employee, meaning wages. We're going to see some wage growth, and it's going to be real, not nominal. This is something I'm tracking. It is why I've talked about the 50% below the median on income is going to see a disproportionate increase in income, and it will be real, not simply nominal. And this will be years in the making. This is the only way, in my opinion, we grow out of this housing affordability, right? There are 3 variables. Everybody wants to scream price. I don't see it. We can talk interest rates. We'll talk more about that in a minute because they are now at a 52-week high. 52-week high and probably going higher based on the 10-year Treasury today. And then there's income, wages. So again, I am here telling you that I don't think we get out of this until 2025, 2026. It's a slow grind sideways, and a lot of it is because we are going to see some true, real wage growth. Let's talk about mortgage rates. Yesterday, Lance Lambert, somebody I follow on Twitter, his handle is News Lambert, you should follow him as well, posted that the mortgage rates came in at 7.24. Why is that interesting? It's a new 52-week high. The old high was 7.22. Folks, the housing market is going to slow down. I am now more convinced than ever that the home buyers believe that 7 is bad, 6 is good. Eventually, we will get to the sixes again and the marginal demand will be unlocked. But it is very likely that we could be above 7% for the entire month of August and maybe even September. This is going to constrict demand. The question we need to ask ourselves, and more importantly, you need to ask yourself about your buy box is, what is happening in my buy box? Is new inventory coming on? Is the inventory move-in ready or is it junk? You need to watch days on market. I believe over the next 60 to 90 days, we are going to see a huge, like a doubling of days on market. The question to watch, and what I will be watching for, is inventory. There is a chance that while days on market goes up 100%, inventory only goes up 3, 4, 5%. There are a lot of sellers that are like, nope, not selling. 7.24% interest not only crushes demand, but it crushes supply because the move-up buyer is further motivated not to sell. Let's talk about Uncle Warren Buffett buying housing. Housing. Looks like Warren Buffett, in his latest filing, has come out and initiated positions in DR Horton, Lennar, and NVR. Yes, folks, Warren Buffett is following the 80s playbook where builders can use their margin to buy down rates like we did, right? We would have had probably a 7.5 or 7 3/4 rate on this home I'm speaking from. Instead, we got a 4.99 plus other goodies. Builders are the ones with the ability to remove payment shock. Uncle Warren sees it, the crash bros don't. They're still talking about shorting home builders, which seems like a very bad idea, but good luck. Now let's talk about retail sales. Retail sales came in better than expected. Retail sales were expected to be 0.4%. They actually came in at 0.7, a significant beat. Ex-autos was even a larger beat. Ex-autos was expected to be up 0.4. They were up a full 1%. Something to always remember about these economic numbers is they are not adjusted for inflation. So what you would do with these numbers is you would subtract 0.2. So in reality, adjusted for inflation, retail sales were up 0.5% and ex-autos were up 0.8%. Certainly not recessionary. We are not going to have a negative growth in Q3 with these retail sales. We can talk about Home Depot. Home Depot beat top line, beat bottom line, but did post a decline year on year in retail sales of 2%. They are highlighting that consumers are cautious on large ticket items. We're going to hear a lot of retailers this week. It'll be interesting to figure out who the winners and losers are, because I think that will tell us a lot about our economy going forward. Very interesting. I actually have a video coming out today at 11 a.m. Where Taylor from Life Goal Investments and I were talking about Fitch downgrading more banks. Interestingly enough, we recorded that yesterday at 8 a.m. And sure enough, this morning, Fitch is out warning that bank downgrades are coming and could take down the titans like J.P. Morgan. Folks, when you think about banks, and you will see this in my discussion with Taylor, which is important, everything is going against banks. What do I mean? Well, first, you think about what banks did. They bought treasuries. Those treasuries now are worth less than face value. That hurts their balance sheet. What happened next? They are now adding regulations, which increases expenses. They are also now having to raise the interest rate they are paying on cash, which hurts their expenses. It makes them less profitable. Also, they are lowering loan volume, which hurts their revenue. And then lastly, and probably most importantly, you and I, are very sensitive to the news cycle. We will move our money in a heartbeat, a la Silicon Valley Bank losing 80% of deposits in a day and a half. This is really going on. I think the banks, as Taylor and I talk about again at 11 o'clock, it It's going to be 7, 8 quarters of this. And what will happen at the end of this is we will simply have less banks. We could see 1,000 banks, I don't know, be merged, I guess is the way to put it. They'll be merged, consolidated together. So it is going to be very interesting. We did have some pretty negative news, again, coming out of China. China retail sales down, or was up 2.5%. Expectations were 4.5%. Industrial production also disappointed, 3.7 versus 4.4. And frankly, one of the things I thought was interesting is China will no longer report youth unemployment. If you don't know, back in June, youth unemployment, which is defined as 16 to 24 years old, hit a record 21.3%. There are lots of challenges going on, as we actually discussed yesterday, and it makes me nervous what might be going on there. On the other side, Japan. Japan GDP surprised to the upside. Expectations for growth was 0.8, actually came in quite healthy at 1.5%. And lastly, let's talk about student loan repayment. Did you know? I didn't know this. This is shocking. It's been 41 months. 41 months for student loans, payments not being required. That's a long time. The question is, what will happen when they restart? What will be hit? That's what I am asking myself. There's clearly going to be an impact on the economy. But what will be hit? Will it be dining out? Maybe. Will it be travel? Maybe. Will it be some type of retailers? Maybe. Will it simply be more bad debt? Will there be write-offs on credit cards, auto loans? We shall see. I think it is going to be very interesting. My hope is a lot of people saved those payments and have a cushion. But yes, there is a lot going on. So again, folks, we need to watch mortgage rates. They are going higher. I really feel good about my call for existing home sales breaking below 4 million in August. It could, I'm not calling it yet, but it even could be worse when we look at September. It'll be a lot about interest rates. So folks, again, I recorded this early because we have some more stuff coming to the house and I didn't want to get interrupted by delivery folks. So I recorded this at 7 o'clock instead of 7:30, so I knew I had time to get this to you. I hope you have a great day. Like, subscribe, comment, and again, if you want to see the 90-minute session on how to get started in real estate today with high prices and high interest rates, go over to my new channel, The Daily Financial News. I'll put a link below and watch the video. For those of you that are tracking, we have now done 1,000 watch hours. We need to get to 4,000 watch hours in order to monetize that channel. But we will get there one day at a time. So thank you for being here. I appreciate you. If you haven't bought my book yet, One Rental at a Time, do me a favor, go get it on Amazon. Leave a review, take a selfie. And here's a tease. The one and only Dion from Dion Talk has reread One Rental at a Time and posted it on Audible. Audible still needs to go through it, make sure the sound quality is good. But yes, we finally maybe getting rid of that robot voice, and the one and only Dion from Dion Talk will be reading to you hopefully soon. It usually takes about 10 days. I will announce once it's available. But we all owe Dion a debt of gratitude. That robot voice on Audible for One Rental at a Time is annoying. Thanks, buddy. Take care, Dion. Bye.